This is going to be actually the first time we record a podcast episode with two guests, so we'll have to see how it all works out. We'll try and make it work one way or another, and it will give me some interesting headaches in the post-production part when I put everything together. But I like a challenge. We normally ask our guests to share a bad but good fintech or banking joke. As there's two of you, has one of you got a joke you'd like to share?
I've found, well, I can't claim to have made it up myself. I've got one, but it's really bad, but that's okay.
No, but bad is what we want. So you know.
I also have 1.5 jokes, so I can volunteer.
And Ville, you sound okay as well, I think, if you just want to say one or two words.
No, I mean, you like me doing this, right? So
Don't. I will chop your fingers off the next time you do that. Okay. Promises. Oh, yes. Also good promises. Right. Okay. Fantastic, guys. In that case, I think we are good to go.
Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Hey guys, and welcome back to another fantastic episode of Fintech Daydreaming, your most fantastically special podcast that we know you are spending every week just waiting for turning up in your channels, ready for you to get another deep dive into what Ville and I think could be potentially interesting. In actual fact, we know it's interesting. We like bringing you interesting stuff, cool stuff, what's happening in the world of fintech, in banking, and God, is there an awful lot of strange things happening at the moment in the whole industry. But there is always, I believe, a silver lining to every cloud, and the silver lining in this case is Ville and I sharing an hour of some interesting thoughts and ideas with you. As always, I am Pål. I will always be Pål, never change that, like I keep saying, and I cannot do this without my wingman Ville by my side. So Ville, how are you today?
I'm good. Loving the confidence you have today about the content we provide for our fans. So it's a good start for today. On the other hand, we also got like 15 centimeters of new snow just now here in Finland, which is of course kind of annoying, especially when you're trying to get ready for spring, and then you get the exact opposite from the weather gods. But yeah, I think maybe we'll get to the spring ultimately. We'll see.
I think so, but potentially you could blame it on me. I was just last week going, I believe it might be time to change to summer wheels. And about 3 minutes after that, it started snowing. So I was like, oh man, I should never have said anything.
That's gotta be it.
Always the case. But yes, you're absolutely right. We've got a really interesting episode with us here today. For the first time, we've got two guests rather than just one, which let's see if we end up with some real passionate discussions in this today. And as we have started a little bit of trend, we did it with Moby Forum. This time we are doing an episode in partnership with IBM. So IBM is in partner with us here. We're doing an episode focused a little bit on what's hip, what's trendy in the area of public cloud, fintechs with IBM and with Antler. So from IBM, we've got with us Prakash, and from Antler, we've got Anders. Anders being a little bit closer to us, Ville, than Prakash, you know, here in the Nordic regions, the best place to be in the world. But let's bring you guys in. I mean, it's fantastic to have you here with us. Let's start with you, Anders. It would be fantastic to just get a little bit of an introduction, let our guests know who you are, where you've come from, what Antler is or who Antler is. And most importantly, we always want to know from our guests, what's your superpower?
Sure. Thanks a lot, first of all, for having me on the show. A big fan and very starstruck here to sit in the very virtual studio of yours and agree on the snow part. You know, it also came here in Sweden a few days ago. But I think, you know, they sometimes attribute Scandinavia building great companies to the fact that our weather isn't so good. So from a startup building point of view, I think it's the perfect weather right now with negative degrees and and lots of snow. So let's hope for that. But again, great to be here with all of you. My name is Anders Hammarbäck. I'm a partner with Antler, an early stage investor, a VC firm. We've been around for about 5 years, and I'll share our story in a bit. But first, on my own side, I started playing hockey at an early age, but when that didn't turn into a pro career, I went into a computer career instead and studied computers, made websites and so forth. And that led me to create my own company at 18 years of age, which eventually led me into business. So I spent some time first in doing internships in London with Goldman, which was super interesting, and sort of started my finance and fintech journey. After that, I went to McKinsey and spent a couple of years, formative and super interesting, working hard with a big focus on finance as well and financial companies and consulting for those. After that, another 10 years in startups and scale-ups in emerging markets, including telecom in Africa and also education and other services in China and Asia. I came back in 2016 to work for a Swedish fintech startup called Qliro, doing payments, BNPL, and personal banking services. So that was sort of a foray back into the fintech game. At that time, I came into Antler, and it was a great time, I thought, to complement the building part that I love with investing. And Antler was also starting up at that time, 2018, and met with Magnus, our founder, and Björn, our CFO, and also Oscar, who has been the co-partner here in Stockholm. We decided to build a new type of VC that really backs companies from the early stage and supports them on their growth journeys. So that's what we have been building over the past 5 years. And now, 5 years later, fast tracking, we are the most active seed stage investor globally, with 25 locations across the world, and investing from the pre-seed stage on a multi-stage philosophy all the way to later stages through different funds. In total, we have 700 plus portfolio companies, fintech being one of the bigger categories within those 700 plus companies, together with green tech and climate tech, which is also a growing field of interest. So all in all, that's what we do. We really call ourselves now a day zero investor, because we're really about the people, backing the best founders early, giving them the platform and the tools to grow, and then support their continued journey to change the world through entrepreneurship. So that's gives you both a personal background and also somewhat of a background to Antler.
And I think actually we need to have a little bit of a chat here, because Ville and I have been mulling over this idea with all of our episodes of Fintech Daydreaming about the idea of building the Fintech Daydreaming bank. We've had advice that maybe the brand could do with some work. I mean, Fintech Daydreaming maybe isn't good for a bank. We've spoken to an awful lot of providers of banking as a service and banking as a platform solutions. And now you coming along, maybe we need to talk to you about some early stage funding here for our world dominating neobank that's going to bring some interesting new ideas to the market. So we'll come back to you late this evening with beers. All right.
Yeah, I look forward to the chat, and definitely, I think that's a great opportunity.
Sounds perfect. Sounds perfect. But Prakash, let's bring you in. Where are you from? What do you do at IBM? And the same question, what's your superpower?
Yeah, so firstly, thank you for having me on as well. It's great to be here. I don't know, I don't think I have a superpower. Let me see if I can work one out as we go through my background. But yeah, today I'm MD Digital Transformation for IBM Cloud for Financial Services. Been with IBM just over 2 years now, and really work with our major clients on the cloud journey. Prior to that, I'd spent 20 years in financial services, so at major global banks, Goldman, JP Morgan, and was part of the public cloud transformation. So I saw firsthand what some of the challenges are of actually trying to get a big global bank up and running on the cloud. So had experience in FinOps, SRE, Agile, product management type transformations. And prior to that, spent quite a lot of time in infrastructure and optimization, operation improvement, etc. But my banking career sort of started on the commodities trading sort of desk of one of the banks. And so I seen quite a few market blow up. So the first one was with Enron in 2000, and then later when I was in 2007, 2008, when the financial crisis hit again then. So I've seen quite a lot of ups and downs. Prior to that, I had a bit of an interesting career. People often don't realize I started off in nuclear engineering and then jumped to snack food. So people always wonder how I managed to do that, and developed snack products, glowing ones and different shaped ones with lots of arms and legs. But that's a different history and a different story for another time, maybe. In my current role, to sort of bring us back up to present time, the reason been working with Antler and really in the fintech side of things is a lot of our banking clients obviously want to work with startups, but they're hitting a lot of problems around that, that doing so. And so we got involved really in trying to understand what a lot of these friction points are and how we can help them. And that's really what got me interested in that space. And IBM's doing a lot of work in this area specifically to take a lot of those issues out of the system, as it were. A number of banks have asked us to look at that. So that's sort of really how I've, over the last few years, got much more involved in the fintech space, not just growing it, but helping solve some of these problems that can really hamper innovation. So that's a quick summary, and I still can't think of a superpower. So sorry, pal. You'll have to.
You actually did share your superpower. Your superpower was being able to radioactively create sweeties or candies, as you said, with glowingness and multiple arms and legs. So I mean,
I used to be the product manager for Monster Munch, which people always think is quite funny. So, but anyway.
Working with radioactive materials and then to snacks. So now we know how flaming Cheetos came around. So. Good to know.
Actually, as a joke, we always start off, very often you start off and I end off an episode, Ville, with a joke. And now that we've got two guests, maybe we have two jokes. So let's take a joke to kick off the mood here. Prakash, do you have a joke you'd want to share with our listeners?
Yeah, and I don't think it's a great one, but it's why did the fintech break up with its bank? Because they didn't have enough interest.
Oh man, I love that. That's good, actually. Yep.
That's actually quite topical because the interest rates are going up and fintechs are reevaluating their venture capitalist positions. So yeah, that's a good one.
Okay. I like that. Fantastic. But back onto the subject here. I mean, we're talking about fintechs. We're talking about cloud. Actually, we've had Howard Boville on as a guest in the past from IBM, talking about IBM Cloud for Financial Services. So if we've got any listeners here that don't know anything about IBM Cloud for Financial Services, go back a couple of episodes and have a listen, because it was quite a good introduction to what IBM is doing in that space. And Prakash, you're right in the middle of all of that. But like you said, with Antler, focused very much on the fintech space. So maybe we could start off with, what are you seeing, both of you, currently as the major trends in the fintech space globally? And I think we'd start with you, if you don't mind, Anders, because you are out there on the bleeding line with these fintechs, trying to help them to get started. So what are you seeing? What are the trends?
Yeah, thanks for the question. So I think we're seeing a lot of trends right now. So trying to keep it somewhat structured. First of all, is of course building fintechs and building startups in general in a high interest environment is somewhat different. So there's the cost to capital. There's higher costs of that capital that many fintechs use as part of their business. So I think that's major trend right now. It's going to be a different ball game for many companies to both be able to sort of play this environment and find that spread that makes sense. On one hand, of course, the cost of capital is more expensive, so that maybe curbs the demand to some extent. But also, the equity is more scarce, so more companies will need credit in order to keep growing as part of their funding. So I think that's a whole new ball game for many companies to tackle. So the high interest. Number two, I would say this is more of a multi-year trend that we see keeps accelerating, and that's the faster internationalization of fintech companies. Just back in the tape 5 to 10 years ago, I think the realm was that fintech is quite difficult to scale beyond the initial home markets because of regulation, because of different consumer behavior and so forth. Now I think we see the fintechs emerging of today are much more aggressive in their international scaling. And there are many good examples of that, of course. And I think it's due to a couple of reasons. One is, of course, that there's been more startups in general scaling faster, and the playbooks for internationalization have become more sophisticated. And that is also spilled over in a positive way to fintech. But I think also the regulations have started harmonizing, which is also sort of led the way to more fintechs going, at least on the regional level, Europe, but also making it between Europe and Americas. So I think that's the second exciting trend that we see. If I can also mention a third big trend, I would say it's really extending the fintech offering to the long tail of things. For example, BNPL, buy now, pay later, which is a big part of the fintech innovation that we've seen. And it's no wonder that this started in the Nordic, or at least it's been big in the Nordics for quite a long time. The abundance of information and credit-based information is a strength. But now we start seeing also new regions starting to have strong BNPL players, including Southern Europe, Italy, and their first unicorn recently as well. I think also on the loans side, personal loans, this has also been an area of recent sort of extended innovation, even into student loans. We saw a company raising a big round here the other week into student loans, which was a group that a few years ago thought difficult to innovate. There's no ability to pay, there's no information about them and so forth. And of course, SMEs for a couple of years now have been in vogue. But again, just a few years ago, SMEs were difficult to do banking with because simply acquisition costs were high, LTVs was much smaller. But now SMEs is a very hot segment. And of course, the cash-based part of markets, including Europe, are now sort of cash-free. So I think that part of innovation within fintech will continue, finding avenues where just a few years it was seen as difficult. In addition to that, we can talk a lot about the infrastructure place of fintech, talking about, for example, the kind of crypto aspect, the blockchain, open banking is continuously a huge trend, cross-border remittances and so forth. Last thing I would say would be also that the whole fintech notion has been greatly extended now to also encompass, I would say, insurance, legal, and perhaps reg tech as part of a bigger fintech notion. And I think this might continue as well. I will not talk about AI because that's a big trend that I'm sure we're going to go into, but those are some of the trends that we can see.
Yeah, AI is definitely getting a lot of focus at the moment, and you're going to get a bonus point for not mentioning cryptocurrencies or Bitcoin, because on this podcast we're a little bit allergic to those terms.
Well,
so thank you for that. But what but also, I mean, what I'd like to poke back at you a little bit on your point number 2 there about global scale, right? Yep. Because I agree with you. We are seeing that there seems to be a dynamic of fintechs desperately wanting to expand as much as possible. And we've seen, I would say, a lot less success than we've seen failures. I think there's maybe fintechs biting off more than they can chew and not maybe understanding the dynamics of different cultures, etc., as they try to expand. I mean, Klarna, you can see what's happened with Klarna in the US. We've had a lot of other fintechs that have scaled very rapidly, done very well in their local market. And the minute that they go, right, now we're going to go global, or we're going to go to another demographic or another region, everything just falls apart. So I'm wondering whether there is a maybe, Prakash, from an IBM perspective here, global scale IBM, is there something that could be done here to minimize that risk or help the fintechs in that global expansion? Because I think going too fast, it's proven time and time again, it's dangerous, right?
Yeah, I mean, Anders, I don't know if you wanted to say anything, or I can jump in here.
Feel free to jump in. Then I jump.
Yeah, so I agree with you, Pål. I mean, I think we've seen, even for non-fintech companies, right? Larger companies can have the same cultural issues, different dynamics in the market, etc. One of the things that we've seen, though, is the other area where they can often get stuck is around the regulations, because even though we have some harmonization, I think Anders spoke about some rationalization, there's still a lot of what we call horizontal and vertical regulations, which can sort of clash, as it were. So the EU has I think a regulation recently, which was more industry focused around payment, and they wanted payments made in a short period of, or different organizations to be able to process payments in a X number of minutes or days or whatever. But then they also had the horizontal regulations like GDPR, which said, you can, certain data can't be shared. And so they were like, you've got to process it really quick, in which case you also need to have fraud detection, but this other regulation will stop you sharing the data to be able to actually enact the fraud prevention. So you get these clashes where they're all well-meaning, but often this is where a lot of complexity and fragmentation can come in. So I think this is one of the areas that we've been looking at, both working with the regulators to try and simplify it and make sure we think all of this stuff through end to end, but also where we have a lot of expertise in being able to help partners and clients and fintechs be able to navigate that, and also make sure they don't get stuck in that, because it's very quickly get into a quagmire of trying to resolve all of this. You don't have the people or the time or the capability to do so. So I think that was just one of the perspectives we've seen in this space.
One thing that we've noticed, that everybody loves the stories around failure when it comes to global expansion. So Paul already mentioned Klarna. We have like N26 trying to enter US. We have, Fedor is quite recent as well. I mean, they had a lot of ambitions beyond Germany. And there's a lot of these failure stories. But what about the successful ones? Is there an exception to the rule that it's very difficult? I mean, is there something that we can look as a model on how to scale globally as a fintech?
That's a good question. I think there's some successes. I mean, success is a long-term, depends on what time period you look. But if you look at iSettle, for example, I think iSettle, a Swedish fintech that we know, got picked up by PayPal. It's an example of where M&A plays a role in that globalization or internationalization. Visa as well, acquiring Tink the other year, is another good example of partnership in some way, M&A in another way, where you sort of pick up a service offering, and through the big reach of the larger acquirer, being able to expand the services across a broader net. I think Klarna is still to be seen, right, how the US expansion goes in the long term. I think they've shown a lot of resilience, despite, of course, some challenges valuation-wise recently, but I think they keep going at it. And I really think that resilience is admirable. We see some of the companies in our portfolio as well in the fintech space. For example, a company called Trade, doing import crediting, raised the Series A last year and doing really well and growing their business. They're also looking at new horizons and new markets. They're in the UK very quickly after the sort of home markets. We see another company called TWO. It's a BNPL company based out of Norway, but also scaling to new markets very quickly in a way that I really haven't seen sort of 5 years ago as we were building our BNPL company. So I think there's something there on the mindset wise, but of course the Atlantic is a big frontier to overcome, and maybe partnership and M&A is definitely part of the solution to that. But founders becoming more and more fearless, and I think over time there's going to be more success stories as well.
So Antler sitting there on the bleeding edge, being early stage investors, etc. Being provocative for a minute, I worked early in my career with IBM through the dot-com boom. And we look at valuations that we have had on fintechs and everything else growing over the last couple of years, exploded sort of to a certain degree at the end of the year, beginning of this year. Aren't we just living through another dot-com boom?
Yeah, I was also in the dot-com boom, having my own startup at the time. And luckily we didn't have too much funding. So we sort of survived through sweat equity and even harder work. So we've seen that in the 2007 banking crisis and so forth. I think it's different. Many business models today can really hold, and the unit economics can be solid today, which we didn't see 20 years ago in that first crash. But of course, valuations have taken a hit in the past 1 year or so. And longer term, I think there's some soundness to that as well. And I think it sort of helps to really shake out the strong business models from those who might not be as strong. And as an early stage investor, I think we invest from the very beginning. So it gives us the ability to really find great founders who might have left some of the bigger companies during difficult times over the past year and decided this is the right time to build a company during hard times, because competition is not as fierce, and it gives us an ability to actually grow in an upswing economy over the next 5 to 10 years. So I think from our vantage points, it's actually a good thing. And the valuations are also not as affected in this very early stage as the much later stage and the sort of near IPO market, as we've seen. So I think it's different this time. And I think it's the survival of the fittest, and the best founders are definitely among that group.
So I'm getting a feeling of what you're saying is that there's a lot more thought and rationale behind the business cases and the business models that are being thought out by the fintechs and neobanks, etc. A lot more than we had in the dot-com boom, and maybe a little bit more realism put into it by the venture capitals and investors to make sure that this is something that's going to fly. I also think that we've, these days there's a lot more relevant innovation going on. And I'm sort of wondering from an IBM perspective, Prakash, what can IBM do? How is IBM working with the fintechs and at the same time in partnership with the large banks to help to accelerate that drive of innovation? Because it's that innovation at the end of the day that's going to bring value and return on investment and return on value to the fintechs.
Yeah, no, and I think that's been one of the issues. I was speaking to one of the banks just a couple of days ago, and they were speaking about how the problem's not so much the innovation that a fintech can do; it's the being able to get it to market and being able to consume it. Mm-hmm. And the reason being that banks rightly have a whole set of regulations and controls that they need to meet, and if they're going to use an external provider, be that a startup fintech vendor, they need to demonstrate that they are still as secure as they are inside of their sort of data center walls, as it were. Mm-hmm. So all of that takes a lot of time. And what we've been seeing is bad actors start to exploit these vulnerabilities in these third and fourth parties to gain access to banking systems. And we've seen the number of breaches through third, fourth parties go up significantly. So it's a real issue that the banks are concerned about. And it takes a lot of resources to go through all of that due diligence. And some of the startups I've spoken to said they go through 2-year sales cycles. So it takes 2 years to get through the onboarding process. And that's what really kills innovation. If you're a bank and go, oh, I love this solution, but then it takes you 2 years to move them into production, it's not really very, useful, is it? So I think that's really where we've been focused. So, IBM has spent decades working with financial services, and a number of banks have asked us about this particular issue and said, what can you do to help us? So partly, there's a number of reasons for it, but, we've built this industry cloud specifically for financial services, which has a lot of these controls built in. It's got policy as code, it's got posture management, and we built this with the industry. So you mentioned Howard, he'd set up this cloud council. We've got over 130 C-suite execs on it now from, I think, 80 plus global banks who've been telling us, what they need from a controls point of view. So rather than leaving it to the industry, we're taking all of this information and building it into our cloud. So we've done the work, and really that's the piece that I think really helps, or at least that we can use to help the fintechs and the startups sort of overcome these issues of onboarding. It's like they can come onto a cloud that's built for the industry, has the controls, the banks trust it and know that all of those pieces are in place, and you can onboard much, much more quickly. And therefore you can focus on what you're good at as a fintech startup. And we bring all of that industry expertise and let you basically carry on innovating. The banks get to consume that innovation sooner. So those are the types of things we've been doing, and I think it's really starting to resonate with a number of organizations now, and we're seeing good uptake there.
I heard something there. I actually heard the word RegTech earlier, and now I heard an interesting phrase that I want to really pick here, because I know that our audience is also interested in this space. You mentioned something called policy as code. Can you maybe elaborate a little bit on that? What does that actually mean, and how does it help fintechs in this space?
So part of what we've done is we've looked at the regulation. So I think we were close to 250 global regulations. So we've had one of the our internal house consultancies, Promontory, have taken those regulations, interpreted them, and said these are the controls that you would need to put in place to be able to demonstrate to the regulator you're meeting their requirements. We've taken that and codified it, so you as a client of ours would be able to see that and go, map all that mapping all the way back to the regulation, to go regulation to control, control to code within the IBM cloud. And then we have tooling which would let you demonstrate that you're meeting that or not. So where I can see a lot of this going is some of the regulators we've been talking to saying, rather than them coming in and auditing the bank or whatever once every 6 months, 12 months, at some point, they'll take all that info and live stream it into the regulator, so they can see on a real-time basis the control status of organizations, which is ultimately what they want to get to. But this is the I think the direction we're evolving in. But that's what we mean by policy as code. It's taken that and converted it into something that's code embedded within the cloud.
Yeah, we already established many times in this podcast that vast majority of IT investments in banks, for example, go for regulatory compliance and basically updating the policies. So if this is helping in that space, this is actually a huge accelerator for fintechs potentially. So interesting.
Fintechs and for the large banks as well, right?
Yeah, sure.
Yeah, absolutely. Yeah, for both.
Okay, so if we play on that a little bit further, it's if you're a fintech, what is the sort of value that you're getting from IBM and Antler together? What is that unique value that's being brought here that will help me as a fintech starting up, got this new idea, fintech bank, as we said, right?
I can, and maybe I'll just kick off and then maybe you can add, Anders. So, part of our mission was to de-risk the industry, and really it's about getting to the startups at an early stage. If you've spent years building a product and then you start to go through this process with the bank, often they will ask you to rebuild things or re-architect or close gaps. So the real value here is if we can partner with organizations like Antler at a really early stage, we start to educate, we start to embed that from the get-go. So from a startup point of view, you're building your foundation for the industry with all of this best practice from the start. So by the time you get to that point, hopefully there'll be very little gap between what the bank wants in order to be able to consume you, because you've embedded all of this best practice. And there's one of the Antler companies that I've been working with called Yazy, is like a carbon footprint calculator. And this is exactly what we've been doing with them. They've been building on top of our reference architectures with all this control security embedded in, and really it's allowing them to get to market much faster with these regulated industries like financial services. But maybe, I don't know, maybe let Anders have his views as well on that.
Yeah, no, I second that. As a young fintech company, a startup building up, pre-seed stage and going to build a global fintech player as an ambition, there are so many games to win here, and you need the stack that you need to build up is just insanely comprehensive. You need to, of course, build the back end data layer, do that well. You need to have a security setup and the compliance and the risk suites that really work. It's not about having a decent one. It really needs to work almost from day one here, because it's so sensitive environment we're playing in. Then of course the computations, the AI, the algorithms, and that aspect as well is quite challenging to build up from day one. In addition, user interface and the experience for the customer, really building a sort of experience that is as good as the best B2C apps. Then you need to build a go-to-market, the integrations that underpin that, and then on top of that, have a kind of branding that works. So I think the benefit of working both with Antler is to kind of help prioritizing which are the ones where we're going to innovate in the stack of different layers. And as a startup, you need to pick some where you're really going to excel, where you're really going to innovate and be different from the others. And that's going to set you apart in the market, but you can't do all of them at once and be different in all of them. And to answer your question, I think there it's really helpful to work with a partner, a bigger company that has really built up the infrastructure to be able to support a growing company with big ambitions, such as the IBM FS Cloud, which I think is a good example of this, right? Both working with experts and having the tech infrastructure as a startup that also can scale as the company scales without having to change provider, and that I think is the good mix of both sides. So yeah, that's also an advice to the fintech founders who are in the early stages of building. Sort of pick which are the areas where you're going to stand out, where you're going to be the best in the world, and do them well. Then over time, of course, you can expand that USP to encompass other layers as well. But in the beginning, pick one or two, and that's going to be the differentiator.
So I'm going to play the devil's advocate here for a moment. Just in our last episode, we had Nick from Engine by Starling as our guest. And he walked us through the Starling journey, the Starling Bank journey, on how they ended up where they are today, and then Engine becoming a spin-off out of Starling. But one of the things that he mentioned, that they started off with a constellation of partners and service providers that they used for different parts of providing the banking service. But as they matured, they realized that they basically want to insource everything. And that's how the Engine was built, basically. They say that it's like a one-stop shop for everything. Mm-hmm. But that aside, isn't this trend kind of worrying? If you're kind of providing a service as a fintech into this ecosystem, is that a sustainable business model if everybody's going to end up building their own things anyway?
Prakash, do you want to take it first? Mm-hmm.
Yeah, I mean, I think some of the things that we're seeing go slightly counter to that. So we're seeing the growth of, I call it everything as a service, right? So more and more clients are coming to us and asking us to, rather than them having to do the integration with either fintechs or other partners like IBM, and then someone else managing and monitoring it and all the rest of it, they're saying, look, we just want trade finance as a service. We want wealth management as a service. We want high performance compute as a service. Someone else go run the software, talk to the providers, integrate it, do all of that work. So I'm actually seeing the opposite. I'm seeing more clients wanting to go down that path because they don't want multiple vendors. They just want one. And I can sort of see in this case, the same things happen, but they've done it themselves internally. But in many other cases, we're seeing clients come to us and just go, look, we just want to work with you. You take care of all this stuff in the back end. And so it's actually creating more opportunities for fintechs because they have specialisms in certain areas, and we can bring the best of breed and basically plug and play all of those elements together. So as long as, I think from a client point of view, as long as it's like simple, they sort of don't care in the back end. And as long as we are able to make the best use of these innovative solutions to meet the client's needs, I think there's still a place. So I'm not seeing that so much. I think there may be one or two instances, but I'm actually seeing the trend in the other direction. So I don't know, Anders, if you want to add to that.
Yeah, no, I think the build and buy decisions are always going to be there for startups. And I do think there's quite a few areas for fintech that are really important, but not the ones where we're going to stand out from the others necessarily, but they need to be really robust and really solid from day one. And for those, I think it makes a lot of sense to partner up with a strong partner who has that experience of doing it many times over for other companies. And I think that's going to be a good case for that also going forward. Then I think there's going to be, startups doing some of that as well, and whether they make it in the long term as service providers, everything as a service within one vertical, providing to other companies, or whether they are, incorporated into bigger companies over time. I think that's an interesting development as well that we're going to see. And the future will tell, of course, what will happen. But I do think there's, especially with the advent of AI and generative AI, it's going to be new companies that manage to capture parts of this in vertical parts, distinct AI fields, and do that really, really well, providing that service to other companies across sectors, including finance.
I can't help but think, to a certain degree, I feel like I'm turning this into an episode of reminiscing down history's lanes with the dot-com boom and everything else. But in some ways, we've been here in the past, right? Where organizations have looked at outsourcing as much as possible to as many people as possible. And everything is really perfect and sunshiny until things start going wrong. And you suddenly realize that you don't have one throat to strangle. You've got 98 throats to strangle. And they're all somehow interconnected. And what you've done is you've created a business spaghetti, right? I won't say architectural spaghetti, although you have that as well, but this is more of an operational level, Aren't we heading in that same direction? Is this where potentially IBM is helping with FS Cloud to create a wrapper around this, to say, well, if we've got all the fintechs sitting on FS Cloud, if we can help you with that operational element of it, IBM can be the neck you strangle, or am I going in the wrong direction here now, Prakash?
No, that's exactly what we are seeing, and to add to that, clients, some of them, when you take it outside of the fintech space, it's happening with cloud. Some of them, most of them are now going to a hybrid world anyway, right? So we're very much seeing, to your point, I think there was a stage in the cycle where it was like, something's good and something's bad, like cloud's good and everything else is bad, and everyone moved to the cloud, and then they discover actually cloud's good at some stuff but not good at everything, and some stuff on-prem, like you're hearing with Starling. So I think we are ending up very much in this hybrid world where it's like, technology is good at some things and let's use it where it's the best, right, for different clients and different needs. So I do agree with you. I think there's the piece in from a fintech third, fourth party point of view, so the issues and friction points we spoke about earlier on. The IBM Cloud Financial Service can really help accelerate that. But then more broadly outside of that, there is the clients are now ending up in this hybrid world, but there's all these complexities. How do I have common control plane? How do I have common observability? And Howard likes this term Franken cloud. I don't know if he's mentioned that to you, where he goes, you end up with lots of cloud and on-premise, and you can make it work, but it's ugly and slow and not very pretty to look at. But you can, if you think about designing for a hybrid world from the start, even for fintechs, knowing that's where the world is ending up, you can create these common control planes, common observability, build once, deploy anywhere solutions. So I think that's where I think IBM made that bet a few years back. And I think it's coming true now. We are seeing that's where clients are running up. And I think a lot of the capabilities that we have allow you to operate seamlessly in that type of world now. But yes, so I do agree. I think it's a little bit back to the future, and let's throw in a few more movie puns, everything everywhere all at once, and I'm sure there's some others we can think of, but it is getting into that type of place. And so I do think it's we do have the solution that can really help clients here.
Another thing that I like to do, just Ville and I have for quite a few episodes now played out this scenario of we're going to build the bank, like I mentioned at the beginning. So if we see ourselves now as being, a fresh startup, a neobank, we're going to build this bank, again, ignoring the branding that we've picked on. But what advice then would you two give us, both from the IBM perspective, but also from the Antler perspective? What advice would you give us to get us started, get off the ground, head in the right direction? Maybe we should start with you, Anders, because you can help us here with early ventures, early thinking, etc. What advice do you give us and all the other fintechs out there?
Yeah, great question, and super excited to be your coach here on this journey. First of all, I think we need to make sure the team is we start where the team is formed oftentimes, and I think having a great team that has complementary abilities, skills, but also a tight-knit core, the values of the companies is very essential. I think you have some diversity among you, even though on some levels, same glasses and so forth, you have similarities as well. But I think the tech part, let's see who's going to build the first aspects, maybe one of you. So we need to make sure that the team is really strong. Then I think it's about deciding what are the first services you're going to build. What's your kind of go-to-market or beachhead into the market that you're going to build. Many companies try to build too many things at once and end up doing things mediocre instead of building something really, really well. And I think that's one decision we're going to be discussing here. What's your kind of neobank approach? Where are you going to be better than the existing players, and which market are you going to start with as well? So those are some of the initial early questions that we're going to be discussing. Then I think it's exciting and helpful to think about unit economics and your business model as well. I think it's an essential part, especially for a fintech company, to make sure that there's a good strategy on the unit economics, even if you're at the early stage, where you're going to be making money a few years from now if this goes well. And then along the journey, of course, we can think about expansion, new markets, new product areas and business areas also. But I think to get started, it's more about making sure that this team has what it takes. Maybe you need a third co-founder on your team, and what's going to be the kind of first services. And in the stack that we talked about before, where are you going to be the best in class, and where are you going to add value to this market? Those are some initial exciting questions that I look forward to talking to you about.
Let me actually pick on one of those topics you mentioned, and it's an important one, which is the business model. Now, we know that right now capital is not as easy to obtain as before, and you just cannot just buy your market share anymore to the same extent that you did before as a fintech. So that implies that the fintechs also are rethinking about their business models and how do they actually reach profitability, and they might be getting there sooner. The bottom line question maybe is then, therefore, have we seen any innovation lately in the business models of fintechs, not only in terms of timing, but the way they want to reach profitability?
Good questions, and I think we can both spar on this question. I think many companies, when capital was cheaper, was trying a plethora of different go-to-market channels all at once, and all of them kind of made sense when the capital was that cheap. And only later, when capital was more contracted, it made sense to be a bit sparse and to really look at what really makes sense. That's maybe the opposite of innovation, but rather being very focused on the go-to-market. I think one thing is to look at integrations, not as a hurdle, but actually as the benefit. When it comes to, for example, being a payments company, looking at the integrations with different web platforms, they cost, it's an investment and so forth. But if you do them really well, I think that can really open up an avenue of many, many, many more customers. And I see more customers just starting to think about innovation more as an opportunity rather than as a necessary hurdle and a cost to get into the market. So that's one example. Maybe Prakash, you want to chip in?
Maybe I'll just go back to Pål, just your question around just the things that the advice I would give, or the things to prioritize. I mean, one is just to think about partners. So there's an old African proverb which I like to use, which is, I don't know if you've heard it, but it goes, if you want to go fast, go alone. If you want to go far, go together. And that's why I think it's really important as a startup to pick your trusted partners who really understand the industry that you're in. So like IBM, like Antler. The second point I would make is just think about where the world is heading. I think it's heading into a hybrid world. So build for that from the start rather than having to rebuild for client needs later on. And the final point would be just around, don't underestimate. You may think at the start, I don't need to worry about regulations, but there's been multiple reports over the last few months from Janet Yellen, who's specifically called out fintech, saying even though they've obviously added innovation, they've also increased risk. So I think the regulators are coming for this space, and you're going to see more of this. So again, I would say think about using solutions that address this, so you're not diverting resources and funding away to dealing with compliance and things like that. You can stay focused on being creative and innovative, and hence things like the IBM Cloud for Financial Services. So those would be the three things I would advocate, would really help you keep accelerating as a fintech.
Fantastic. Unfortunately, as always is the case when we have our podcast episodes, time flies when you're having fun and interesting discussions, and we are rapidly heading towards the end of another episode. I, for one, have ended up with some fantastically good insights here. I think, Ville, we are getting closer and closer to our inaugural startup of Fintech Daydreaming Bank. We've got Antler here giving us fantastic insights into our business case, and they're realizing that obviously we're going to have the best bank in the world because we've got the same glasses.
Yeah, and I was taking notes, so it's good.
That's even better. So I mean, we're heading in that good direction, and like Anders said, it all comes down to the team. It comes down to the passion in the individuals, and I think we are full of passion, even though sometimes we end up in immense fights, but they're all for the good reasons. And then we move over to we've ended up with a large amount of funding from through the help of Antler. We go and talk to Prakash and the whole IBM cloud world and how we can embed ourselves into IBM Cloud for Financial Services, build our bank on that with the partner ecosystem that they've got. It sounds fantastic. And obviously at the same time, maybe we bring with us a engine by Starling or whatever else that might accidentally happen to already be sitting there on IBM Cloud for Financial Services, and poof, we've got a bank. Then we expand very rapidly into all of the markets and world domination, and maybe we'll look more towards a full reserve banking model so that we don't end up ending in the same way as some bank in Silicon Valley did very recently. So that's my summary of today. I don't know, Ville, are you feeling the same passion and energy out of this?
No, just got to say that, and then we take over the world.
Then we take over the world and forget about the bloody Bitcoins. Anyway, that's the second time we mentioned it. This time we won't mention it again, I promise, dear listeners. But before we round off here, we promised 2 jokes for today. So, Anders, do you have a good but bad joke you want to share with our listeners?
Yeah, I do actually. And first, thanks a lot for having us on the podcast. It was a great pleasure as well meeting all of you. And in wrapping, I would also like to say that we're here to support your neobank and anyone else listening to this amazing podcast who wants to build a company. Antler is here to support across Europe and the world. And we have a cohort starting all the time, I would say. Just check on the website, antler.co, to find cohort starting dates. But I'm happy to deliver a good, bad banking joke as well. And so actually, it's a question. Do you know why HSBC bought that startup bank from Silicon Valley for $1 recently?
Nope. As long as we're not suddenly now going to get sued by HSBC, all right?
No. We got a good bank for the buck.
Oh, I love it. Okay, guys, thank you very, very much. Before we round off, Prakash, Anders, is there any question or any point you really wish we would have asked or covered in our discussion today?
No, I think you covered it all from my end. So thank you for that. And it's been a pleasure being on. So thank you for the invite. Excellent.
Anders?
Same here. It's been great to be here. I really appreciate the support, partnership, and collaboration as well with the IBM cloud team and Prakash and your team. So thanks a lot for that, and look forward to continue the collaboration.
Fantastic. And for our listeners, if they want to find out more, how can they reach out to you and find out more details or engage in a continued discussion? Prakash?
So, I mean, if you want to know about the IBM Cloud for Financial Services, you can go to ibm.com and that will take you to it, or you can just connect with me on LinkedIn and we can go from there.
Okay, Anders?
Same here. Happy to connect on LinkedIn or just email anders@antler.co or through the Antler website, antler.co. Look forward to the conversation and thank you very much.
Fantastic. Thank you very much. And thank you very much to IBM for being our partners on this special episode this week. And as always, thank you very, very much to all of you fantastic, adorable, lovable listeners and followers of our podcast. We are slowly growing. I can see numbers going up every single week. It is for you that we do this. I got to admit that Ville and I take some passion out of getting to spend an hour talking with some of our people we admire in the industry, but we do this for you. So it's fantastic to see the numbers growing. As always, please hit the like button, please hit the subscribe button, leave us a comment. The comments really spice up the algorithms and help other people finding us. And I know we want to stay to be a small little tight-knit community, but yeah, we also want to grow here at Fintech Daydreaming. We will be back in 2 weeks' time, Ville and I, with another fantastic episode and another fantastic guest. Until then, thank you for joining us. This has been Fintech Daydreaming.
This is Fintech Daydreaming.